Good evening, everyone. Today, let me welcome you all to the webinar, which is organized by the Internal Audit Standards Board. And this webinar is on the risk-based internal audit assessment, especially focusing on P2P. We are missing our chairman and vice chairman today. They had some prior commitments. So moving on directly to our subject today evening, which is going to be briefed upon, helmed upon, and really well conveyed to us by CA Vijay Kulkarni, sir. Let me brief you all about Vijay, sir. He is our speaker today and carries 8 years of experience in the field of internal audits and risk advisory, including 3 years of his articleship. He's been a speaker on the subject of internal audit for the Internal Audit Standards Board, now known as the Board of Internal Audit and Management Accounting. He is part of the core committee for internal audit of BCAS for financial year 24-25. He is the manager of the internal audit at the Mumbai office of Kirtane Pandit and is working as an integral part and leading a team of articles and assistants as a part of the firm's practice of internal audit and risk assurance for mid-size and large corporations pan-India, which include listed companies, privately held entities, government corporations, as well as MNCs. He specializes in risk advisory, including internal audits, IFC design testing, process reviews, SOP drafting for both Indian as well as international clientele. He's an active contributor in the research and development of new age internal audit techniques and internal audit programs at Kirtane Pandit LLP. He is also involved in various social causes for the betterment of society. So let me welcome Sir with so much of his experience and knowledge in this field. And before we move on or hand over, let me just brief you that risk-based internal audit, when we say, we are talking about auditing from end-to-end procurement to payment cycle by prioritizing high-risk areas like fraud, non-compliance, and inefficiencies, and rather than auditing every transaction equally. So I'm sure he's going to harp upon that subject in detail. So let me hand over to Vijay sir. Vijay sir, the mic is open for you, and we'll take up the questions in the end, my dear friends. So whatever questions you have, you can put it to cross through us. And after the session, we will have him answer your questions. Over to you, sir. Thank you.
Yeah. Thank you, Prerna, for such a warm welcome. Thank you to all the members also. So good evening, everyone. Thank you for joining the session on risk-based internal audit, where we discuss the procurement to payment. And thank you for the Internal Audit Standards Board of ICA. It is an honor to speak before such a distinguished audience of audit professionals. So myself, CA Vijay Kulkarni, I'm manager at Kirtane Pandit. So first, the objective of this session is to understand the end-to-end cycle of P2P, that is procurement to payment, to identify the key risks which at each stage, and to discuss the practical audit checkpoints. Even I will share my experiences with you, and in some cases where the data analytics that can be applied in real audits. Okay, so first I will share my screen. Hope my screen is visible. Can please someone confirm from the team?
Yes, sir. You can go ahead. Your screen is visible.
Okay. Okay, man. So we will divide our whole session into two to three parts. First will be I will explain you what is an internal audit exactly. Second is what are the procurement to payment process, and the third point, what are the checkpoints, what are the risks involved, what are the checkpoints, and at the last we will see few of the case studies as well as There will be some questions for you also, and at the end we will take up the questions from the team. Okay. So, the first thing is what is exactly is internal audit. So, internal audit is an independent objective. Yeah. So internal audit is an independence. It is an independent objective. It adds value. So first, what is independent? So the internal auditors are generally independent. They are not under thumb of any of the departments. For example, if even if the top management has done any fraud, so even those frauds should be reported by us. So what are the objectives? Objective means it is based on the evidence and not of any of the gut feeling. So the management expects that we show some of the data to them, and not just because we have some suspicion on them, we just randomly report those points. The primary objective of any of the internal auditor is value addition. Our main role is to solve the problems and just not to find them. For example, our only role is not telling them the violations, but also cost savings. We recommend them the better processes. So that is primary objective. The next line, which we can see here, is it helps the organization accomplish their objectives. And the bold things are risk management, control, and governance process. So I'll explain it to you. So internal audit process, internal audit help companies reach their goals by methodically checking and fixing how they handle risk, follow rules, and make decisions. So I have highlighted risk management. So exactly what is risk management? So if there are any dangers that we might miss, it is risk management. So controls are whether the controls which are in place, whether they are working properly, and governance is are the right people making the decisions. Example, again the VP, the top management example which I gave, that we ensure that the VP does not approve any limits. For example, if the limit which has been provided to VP is around 50 crores, but if he approves any voucher or any invoice more than 50,000, so these things are not right. So our role is to identify them and it report to the top management. The next thing is expectations from the next thing is expectations from the internal audit. So in any of the organization, it is divided into three parts: the process owners, the C-suite management, and the audit committee. Okay, the C-suites are generally CFOs, CEOs, and CXOs. So audit committee, so what are their expectations from any of the internal audit? So they require a crisp and concise reports. Okay, so they just want in high risk observations, and not all the points we take through the top management to the audit committee. And they need an assurance from the internal auditor that my controls are effective, and the main focus of the audit committee is on the statutory compliances. The C-suite management, they are more into value additions, the new insights. They hope for new audit findings in each of the audit. The cost control, as I explained earlier, the cost control, cost savings, and efficiency, and they require improvement recommendations from us. So the one thing which C-suite level, the CXOs, CFOs, or CROs, they look is the clear linkages of our audit work to the business impact. In short, the what all improvements they can see in a day-to-day activities in an organizations. For example, bringing up automation, or savings, or the risk reduction. The main focus of the C-suite management is on that. The third level is the process owners, with whom we deal on day-to-day basis. They understand the ground realities and the operational constraints. Main thing which they are generally they have an issue is with there should be no surprise reporting of issues which has already been solved during the audit. A bit minute I will share a reporting format with you. The main focus is on the implementation. Then if we are providing any recommendations, it should be practical. The practical recommendations, we should provide a practical recommendation that are implementable. Okay. Yeah. So the internal audit process, it is divided into 4 parts: the planning, fieldwork, reporting, and follow-up. So what happens in the planning is we design the scope, we identify the risk. Okay, in the field work, it is extraction of the data, the test controls. In reporting, we communicate with the impact, and also we provide the recommendations. And in follow up process, we track implementation. So so these are the yeah, we have an opening meeting also. We have exit meetings with the process owners. We discuss all the points with them. Okay, so it's so before that, yeah, to meet these expectations from the management, from the C-suite level as well as the audit committee, the internal auditor must understand the P2P process in detail and focus on risk at each stage. So yeah, this is the reporting format. So there will be audit finding. The observations are generally divided into three parts: the high risk, medium risk, and low risk. The root cause, it is a PVP IT, which you can see is the process based business process, people, and information technology. That is the IT risk. Okay, so how we draft the observation is, first we write the background. We explain them the statutory provision. If there are any statutory provisions, for example, if there are points on MSME, so we give them background, and later we write the observations. So implications, we should divide the observation into compliance risk, if there are any non-compliance to any act, whether the operational risk, if of reputational risk, and finance risk. For example, if we are auditing any hotel industry or hospitality sector, so reputational risk will come in place. Then we have to provide them practical recommendations which are easily implementable. The next stage is responsibility and target date. So responsibility, so we have to make a process owner responsible for specific, or a process owner person or a department responsible for the actionables, and we should take target date from them, which we should track in the action taken reports in the next stages. So yeah, let's start with procurement to payment process. So what is procurement to payment process? I will explain it very in a simple language. It is a sequence of activities from identifying a need. So first thing is need, to making the payment to the vendor. Okay, that this thing is written in the paragraph. So it involves a transactional flow of data with the supplier from point of order up to the fulfillment of the actual order to payment of the product of the services for the services. Okay, so the whole procurement process is divided into stages. First is the planning stage, then raising a purchase requisition, which is a PR, then approval of PR, the vendor selection, the purchase order creation and approval, the goods receipt and the quality check, that is the afterwards we do GRN, then invoice receipt and verification, the payment processing, and we should comply with the related compliances. Okay, yeah. So this is a P2P cycle: the requirement planning, the raising purchase requisition and approval, vendor quotes and selection, creation of purchase order approval, goods receipt, the quality review, preparation of GRN, invoice approval, and vendor payment. Okay. So the one question is, why procurement to payment matters to us. Okay, so in an organization, P2P, that is the procurement, is the highest risk process in any of the organizations, since it involves large volume of transactions. It is a direct cash outflow, and multiple stakeholders and touch points are involved. Okay, so a well-designed risk-based internal audit of P2P which can help is, it can identify the leakages, detect leakages and frauds, improve the processes, and strengthen governance and compliances. Okay, so now we will talk each stage with a focus of risk. Each stage, that is PR, PO, GRN, invoice payment, within each stage with a focus on risk, and I will also explain you the audit checkpoints which you can apply in any of the organizations which you are auditing. So the first is the requirement planning. Okay, so first we have to plan our procurement. So based on the production plans, if we have any sales forecast, the maintenance schedules, or the project requirements. In this, it involves a cross-functional team such as the production team, stores team, maintenance, as well as finance budgeting. Okay, so we have to determine. Yeah. So we have to, what are the key risks involved in the planning stage? So there may be cases where overestimation or excess inventory. I will give an example of overestimation. risk due to overestimation, that is the we can have an excess inventory, higher carrying cost and storage cost, risk of obsolescence or expiry. Okay, so there may be cases of underestimation of requirements also. If we don't plan properly, there may be stockouts and production stoppages, emergency purchases which we can do at higher cost. So we even there will be loss of customer orders due to delays. Okay, so and the second case is that the risk is the lack of documented planning. If we don't document our planning, there may be no formal demand for planning process. So requirement based, the requirement we can have on ad hoc basis, and there will be no linkages between the approved production plan to the sales plan. Okay. The one more risk which I find is the collusion risk. Okay. So there may be cases that is a fraud. That there may be cases of artificially inflating the requirements to favor specific vendors. Okay. So or excess or unnecessary items being planned to enable the misappropriation of the purchases. Okay. One more risk is which I find is a budget control failure. Okay, if you don't plan properly, the requirements is which has been raised for the cost centers where the budgets have not been approved, or all the budgets may already been exceeded. For example, if you are planning to buy a product for around buy an asset for around 25 or to 30 lakhs, but our budget has already been crossed. So if without a proper planning, we won't be able to adhere to our requirement. And one more risk is there may be difficulty to identify abnormal or usage or wastage. So the audit checkpoints which I will provide you for that for the proper planning audit is there should be documented planning process, linkages with the production and sales plan. We just define the consumption norms or the bill of material. You have to review whether the budgets and the planning schedules are approved and monitored continuously by them. And the requirements they should be approved by both the operations as well as the finance team. Okay, so once the our planning is done, the next stage is the purchase requisition of raising of a purchase requisition. So what is a purchase requisition? It is an internal document which is raised by user department. So it is just saying that we require a certain product. Okay, it contains the description, exactly what I need, what are the specifications of the items, the quantity and the required, till what date I require it, the cost center, why I require it, as well as in some companies they have to provide justification also as to why it is required. Okay. So the key risks which are involved in the PR process, the risk which I am telling you, you can apply to your audits also. So there may be some observations regarding to it. So yeah, one more point. The key risks which are involved in the purchase requisition process is unauthorized PRs. The PRs raised by the personnel who are not covered under the delegation of authority of the organization. For example, for any of the PRs which the PRs have been approved by I think the sales guy. So sales guy is not included in the delegation of authority metric the DFP matrix. So which is not right. So you have to check those cases. There may be cases of incomplete or vague PR details. For example, the generic descriptions have been given in the PRs, or instead of a detailed specification, no clear justification for the requirement. There may be cases of where you may find such cases. And one more thing with the risk was involved is in out of the 100 purchases, example 100 purchases they are doing, 90 to 95 purchases are emergency purchases. So you have to personally you have to identify why such emergency PRs have been raised. There may be cases where such PRs have been raised just to bypass normal controls or quotation processes. Okay, there may be cases of backdated PRs also. PRs have been raised where the PRs have been raised after the PO or GRN to regularize already initiated purchases. That is backdated purchases. In some of the cases, the PRs have not been linked to plans or projects. So, for example, if I am building a specific project, so the request which has been raised is not linked to those plans or projects. And whether the PRs have been approved. So that is the main point. So for that is an audit checkpoint. So when you are auditing the PR thing, you have to check whether the PRs are raised by the authorized personnel only, the completeness and the clarity of the PR details, and one more thing is the system backlogs. For the system logs, we have to check for backdated PRs, then the linkages to PRs to approved plans or projects. Okay. Yes. The next thing is the purchase requisition approval. I think I covered it in the PR process only, but yeah, I will just tell you the risks which are involved in the PR process. There may be cases of there may be few cases of rubber stamp approvals. Uh, I will give you a live example where I have checked that the PRs have been approved of around a million. I think $1 million PRs have been approved by the CFO within a period of 15 to 20 seconds. So it shows that the PRs have been approved without reviewing the quantity, justification, or it impacts on the budget. So which is not right, and which is a high risk category item. Okay, so there may be cases of breach of in the approvals. There may be cases of breach of delegation of authority. Approvals have been made with beyond the monetary limits. There may be cases of split PRs also. Split PRs is I will give an example of split PRs. There may be cases where a specific person he is authorized to he has been authorized to approve only an amount of around 10,000. But so what they do, they create two PRs of around 8,000 and 8,000, and a same person would approve that PR. So this is a case of split POs. Okay, there may be cases of verbal or offline approvals also. The in many of the organizations which we see that अरे हाँ उन्होंने phone पे बोल दिया. Sorry, there may be cases where they may say that yeah they just confirmed it on phone or email or chat with no proper audit trail in the system. There may be cases of approver and the requester collusion. So the same person is approving as well as the same person is requesting the PR. Okay. So what we can do as an auditor is we have to check the PR approval processes as per the DFP, evidence of actual review. So what is the process of how the PRs have been approved? We can test for the instances of split PRs around the approval threshold. And if there are any PRs which have been approved after creating of PO, GRN, invoice or payment. Okay. So sorry. Yeah. So the next case is vendor selection process. So what is the vendor selection process? It is a process of identification, evaluation, and implement of suppliers. So we have to check for the approved vendor list only, and there should be a criteria which has been set before selecting a vendor based on his cost, quality, reliability, and the ethics. So what is the goodwill of that vendor in the market? We have to consider those cases also before selection of any vendor. Okay, so what are the risks which has been involved? I will explain you the risk. So, there may be cases where inadequate vendor due diligence have been done. For example, no verification of PAN, GST, financial stability, or the legal status or the goodwill of that specific vendor. There may be related party transactions. There may be related, but that is the same that is related party vendors. That is the employee of the organization is my vendor. Yeah, or the management which has not been disclosed. If it is been disclosed and documented, then it is okay. But if it is not disclosed, then it is that isn't a trigger for you. In some of the cases which you will find there may be cases of single vendor dependency, over reliance on a single vendor. That this may create a supply and pricing risk. There may be cases of non-compliance with the competitive bidding. The three quotation rule, which is the standard rule for taking up the quotation, that is not been followed. The quotations are informal, unsigned, or obtained from a related entities. Okay, there may be cases of non-comparable quotations where the different So if you require a certain raw materials, so the specification, the terms, codes used for comparison are not correct. So we have to run through all the quotations which have been received while auditing. The vendor performance is not being monitored. We have to even after the vendor onboarding, we have to consider his delivery performance, the quality issues or service level. If there are any past complaints which have been received, those things we have to consider while these are the risks which are involved and to consider during audit. So the audit checkpoints which I will be providing you is, yeah, while auditing for vendor, we have to check the vendor onboarding documentations, vendor KYC, the background check. There may be any news articles regarding the vendor. What is the process of declaring a conflict of interest? For example, the risk which I told you of related party. So we have to take a we have to take a declaration from the employees as well as the vendor that no one is related in the within the organization directly or indirectly. Yeah, we have to the data analytics. We have to perform data analytics to identify the vendors with common addresses, bank accounts, or contact details, and uh, we have to do a trend analysis of spend concentration by the vendor. Okay. Yeah, these are the points which you have to consider for vendor selection. So if there are any alternate resource which source which of request that will be more cost effective. Example, if some vendor is providing us for $10,000 and this other vendor is providing us for 9,000, we have to check select L1 vendor only who provides us with the lowest price, best quality, and fulfills our requirement. However, if L2 or L3 vendor is selected, there should be proper documentation, proper reasoning for selection, and the same should be documented. Okay. If there are, we have to check for cases if there any existing contract or inventory that can be leveraged to fulfill this request. So the risk involved here is uh, the overstocking of inventory. And if is RFP or RFQ is needed, we will discuss this in detail. Okay. So what is RFP, RFQ, or direct purchase? So RFP is request for proposal, and RFQ is request for quotation. This is important for the new articles since they are not aware about the RFP and RFQ, the difference between the RFP and RFQ. The articles who are newly joined or who are seeing this presentation. Okay, so they're used for the structured procurement, and as well as the direct purchase is used in limited predefined situations. That is the proprietary items or day-to-day purchases or very low value purchases. If you are doing within the organization, we generally do direct purchases. Okay, so I will explain you the risk which are involved in the direct purchases. So again, in this also there may be cases of splitting the purchases into smaller lots to avoid the RFP and RFQ requirement. Example. So there may be cases the organization has structured a policy where RFP has to be has to be. We have to take an RFP. We have to generate an RFP if the value crosses around 50 lakh rupees. But what they do, they to avoid going the process of RFP and or RFQ. They split the purchase requirement into two. For example, 40 lakhs and 40 lakhs. So if you check it in totality, it is around 80 lakhs. So ideally, an RFP should be RFP is required or an RFQ is required. However, if you go for 40 lakhs and 40 lakhs, the amount will come to the totality in 40 lakhs. But if we go for 40 lakhs and 40 lakhs, we can do direct purchases. So this is splitting of purchases into smaller lots. Okay. Or the other risk is the limited circulation of RFP and RFQ. Only preferred vendors are contacted, which reduces the competition. We have to check the mail trails also to whom the RFP and RFQ has been sent or an invitation has been provided. There may be cases of fabricated or backdated quotations. I had checked some cases where the changes have been done in a pen or use of whiteners. Also, we can check in some of the cases. So if whiteners has been used or there is some scribble in the RFP document, then it is a highlight for you to check it properly. Okay. So and in case there are any negotiations with the vendor, so there are no record of the negotiations. There may be revised offers or final terms which have been agreed. So all these things are the risk factor which as an internal auditor you should check those properly. Okay. So what are the audit checkpoints for examining those? Is the thresholds. What are the thresholds which have been set for direct purchases versus the RFP and RFQ? Okay. So and the evidence of the quotations or receipt dates and the negotiation records. Okay. And we have to test check the cases where there are single quotations have been obtained or instances where direct purchase is used repeatedly for similar items. So a single item I checked in on an hospitality sector, in an hotel industry where the day-to-day vegetables which they are purchasing, where they were doing direct purchases. So we told them to avoid it or to make a contract with the vegetable vendor so that the price would be fixed. But they provided a certain reasons for that due to which it couldn't be implemented. But yeah, you should be aware that the management would try some or the other things to avoid RFP or RFQ. Okay. So the next process in the procurement is the purchase order creation and approval. Yeah. So PO is created based on the approved PR and the selected vendor. So PR is done. Our vendor is selected. Now the next process is the PO process. Okay. So in the PO process, yeah. The next is the sorry. So next is the purchase order creation and the approval process. Okay. So yeah, the PO is created based on the approved PR and the selected vendor. What we have to formalize is the item details, the quantity, the rate, the delivery schedule, the payment terms, the tax detail, and the other details. Yeah, records the number, PO number in its book, the transmit the order to the vendor for fulfillment. Okay. The terms of the PO should be in line with the PR. The one risk is the open PR and PO should be closed within the defined time limit. So we can keep it monthly or quarterly based on the discussion with the management. Okay. The key risks which are involved is there may be cases where the PO have been raised without a PR or the PO is raised before PR. So this is a high risk. The commitments created out, there may be commitments which have been created outside the planning budget or the budgetary controls. So there is a breakage in the control matrix for PR to invoice payment. Okay, there may be a mismatch between the PR and the PO. There is one more risk where the PO quantity or the rate is exceeding or the approved quotation. Oh, there may be one more risk where the additional items have been added to the PO. For example, in the PR, which has been approved, we are writing only, we are giving them only 10 to 15 or 10 items. But in the when we check the PO, there are cases of 17 to 19 items. So it is a clear case that for the rest of the 8 to 9 items, there are no PR only. That is, there was no planning for those items. Okay. There may be cases where the PO terms were ambiguous or incomplete. The payment terms have not been written properly. There were no penalty clauses. There is no arbitration clause. There is no unclear. There are unclear delivery terms. One more thing which is very important is there may be cases of manual POs which have been prepared outside the ERP, which they are using. So we have to check for sequencing also. The POs which have been issued via Word document or email document or bypassing the system control. There may be such cases. There may be cases in PO where the incorrect taxation or regulatory details have been entered. For example, wrong HSN or SSC codes. The GST rates have not been updated properly. And in the vendor master, the MSME status has not been captured. Okay. So what are the audit checkpoints which we have to check? This we have to check. First thing is whether the PR has been whether the PR PO sequences we have to check, and there has been linkages from the which we tell as 5-way check, and alignment with the PO with the quotation and PR. Okay, we have to check the workflow of POs as per the delegation of authority, and we have to check whether there are any incidences of manual POs and the reasons for such manual POs. Okay. Yeah. Approved purchase order dispatched to vendors. The next slide is regarding the goods receipt and the quality review and the GRN process. Okay. Yeah. So So I will first explain the goods receipt and the GRN process. So the basic description of the GRN is whether the goods are received at the location, the quality and the quantity have been checked against the PO and the delivery documentation. And the GRN has been created in the ERP in any of the organizations where you are auditing. There may be cases where the GRN has been prepared in the manual registers. So such things should be avoided. We have to recommend to management to automate the GRN process. The risks which are involved are the GRN has been done without the physical receipt of the document. In many cases, I have seen where the GRNs have already been prepared, but the physically the goods have not been present. Uh, and the GRN will be prepared to enable early payments, or they have to hide something from us. So the GRNs have been prepared, but the goods have not been actually received to the management. There may be cases where the GRNs have been prepared before the purchase order. So we have to there may be the risk is the regularization of unauthorized receipts of the goods. So yeah, and one more risk is out of the 100 quantities which we have ordered, which have been highlighted in the POs, there may be cases where we have received only 50 quantities, or we on this or we have received around 150 quantities, and the higher risk is we have received 50 quantities, but while recording the stores keeper had recorded full quantity. So we have to investigate those differences. Okay. There may be the risk. One more risk is that there is a weak segregation of duties, which is very important that the same person is handling receipt, he is also inspecting, and he is also making a GRN entry. So I will repeat it again, which is very important is the same person is handling the receipt of the goods, he is also inspecting the goods as well as he is doing the GRN entry. So yeah, so this risk is very important. We have to check and highlight it to the management. Okay, so one more risk is that the rejected goods, if there are any rejected goods, those goods are not properly, they are not segregated properly. There is no location, there is no proper segregation between the accepted goods as well as the rejected goods, and there is no follow-up or credit note for replacement of those rejected goods. There may be cases in the system where the duplicate GRNs against the same delivery challan, and that is the same delivery challan has been used for more than once in the GRNs. Okay, as an auditor, what we need to check is the GRN dates with the vis-a-vis the POs and the invoice dates. The documentation, we have to check the delivery challans, we have to check the e-way bills, we have to check the inspection reports. Today, it is very easy to check the GRNs. We have to just match the e-way bills versus the delivery challans versus the e-way bills. Okay, we what test we have to do is we have to check whether what are the instances where there are GRNs without the POs, where the GRNs have one thing which I would like everyone to check in your organizations wherever you are auditing is what are the GRNs which have been passed, which are close to period end or with unusual quantities. So you will go to your audit and please check those through data analytics. If you can check that what are the cases where in a single month the GRN has been passed close to the period end. So generally they do this for inflating the sales. Okay. The next point is the invoice approval process as well as the vendor payments. I will cover it. Okay, so the vendor sends us the invoice through post supply of the goods or services, and the invoice is recorded by the accounts payable or finance. So yeah, so the risk which are involved in the invoice receipt and the verification of the invoices have been prepared without the PO or the goods receipt note. There may be service invoices or small purchase invoices which are processed outside the standard P2P chain. And one more thing is there may be cases of incorrect tax treatment, the wrong GST rate, the place of supply or TDS section. There may be cases of also fake or altered invoices, where the wrong there may be cases of fake or altered invoices where wrong vendor details have been entered, bank account changes have been done in the last minute, tampered invoices or dates, and also if possible and there may be it also check for the duplicate invoices. The same invoice number have been booked for more than once, leading to duplicate payments. Or there may be cases where additional charges have been paid, for example freight, packing or service charge, which are not a part of the original PO. Example, if the original PO uh, contains a product for around 100 rupees, the delivery charges was for 10 rupees, the total comes to 110 inclusive of GST. Okay, but while you are checking the invoices, there are original product is for 100 rupees, the delivery was for 10, the packing charges, service charges and all other charges have been included, and the payment has been done of 150 rupees. So these things we have to check and highlight it to the management and ask for reasoning that why there is a difference between the original, the PO as well as the versus the invoice. Yeah, we have to check for the correctness of the GST, TDS and other taxes. We have to detect that whether there are any duplicate invoice numbers. Yeah, so one thing which we have to check is identify unusual round sum invoice amounts. Okay, so there will be cases where there may be grouping the invoices. For example, you may check while you are analyzing the payments which have been made or the invoices which have been raised, we have to check monthly they are making a round payments of around 5 to like 5 lakhs, 5 lakhs, 5 lakhs if you are taking. So these transactions should be highlighted in while you are reviewing the payment register or the invoice register. Okay, and these things should be included in your sample which you are taking for reviewing of the data. So the next process is the vendor payments. After receiving the invoice, we have to make payments to the vendor. The payment is only made on the approved invoices. The process which has been followed is the preparation of the vendor payment proposal, the authorization of the payments, and the most important, the execution is done via NEFT, RTGS, or checks. Okay, the risks which are involved in the payment processing, I would like to highlight it in front of you, is the risk of payments without proper approval. So there may be cases where the payments have been made manual or off the systems. You have to be aware. You have to be cautious that all the payment should be done with through the system only, through the banking channels only. There should be not be any cash purchases unless very low amount, or that is less than 10,000. Okay, the payment have been made. The payment have been made before the goods have been or services have been received. There is the advances have not been tracked or adjusted in time, or there may be cases of risk of non-delivery or disputes. Okay, so one more risk is unauthorized changes in the bank details. This case even I had identified in one of the organization where the where in one of the mail trails, while the bank details which was approved was different than the bank details which was through to which the payment was made. Just because a payment was just because the bank details were changed in the last moment, and the one who had approved the payment, he was not kept in the CC while making the payment to that specific bank account in the mail trail. So this thing we identified, even the management appreciated us. Uh, so it was a fraud of around the we identified it very early. So it was a fraud of around 3 to 4 lakhs. So yeah. So one more point is that there is no the risk is there is no reconciliation because before the accounts which were payable with the general ledger. And yeah, most important, non-compliances with the MSME provisions, which I'll come later. But yeah, with the payments have been made beyond 45 days, we have to consider the tax implications under 43BH as well as the ROC reporting, MSME Form 1. Yeah. So the test check which we have to do from as an auditor is the payments. We have to check whether the payments have been made against the corresponding invoices or GRNs only, and the payments have not been made outside any standard payment run. Okay, so review which we have to do while making the while auditing is whether there are any changes in the bank details prior to payment. We have to reconcile the accounts payable versus general ledger and the aging reports. Yeah. Before moving forward, I would like to show you one video on the risk management process. It is a very nice video. So won't yeah. Give me 2 minutes. Yeah, Prerna, just confirm whether the audio as well as video is visible.
Yes, yes.
Yeah. Yeah. So this video highlighted what are the risk, how important the risk identification, the risk analysis, and how much it is important to keep us update to keep ourselves updated and to keep ourselves updated with the new technologies uh, and improvements which are taking place within the organization and also in the place where we are auditing. So I will share my screen again. Prerna, my screen is visible. Yeah.
Yes, yes.
Okay. So yeah, these are the checkpoints which we discussed during our the PR to the planning to vendor payments process, which is I had already mentioned, explained you many of the checkpoints. But yeah, also these points are important. That is, there should be a well documented procurement. Yeah, these are the checkpoints which are from both auditees as well as the auditor's perspective. There should be a well documented procurement policy. There should be the organization should develop a policy which is to be followed by all the employees. Regular training should be provided to all the employees as well as the process owners, and this should be the policy which they have prepared should be reviewed and updated, and that so that it should be in line with the company requirements as well as the market scenario. So the next point is the supplier selection and management. We already discussed it in detail. This also we discussed as standardized purchasing process. It should be taken only from the approved vendors. There should be minimum 3 quotations. The process automation should be there to curb the manual errors and increase the efficiency. There should be regular process audits which has to be done by the management to ensure compliances as intended. The checkpoints for P2P, yeah, the purchase orders, the PO requirement, there should be the purchase requisition to precede the purchase order, the PO approvals. The next point is the GRN, which we discussed in detail. Yeah, invoices, we have to check for the vendor master vis-a-vis the employee master, verify vendor invoices. Yeah, this is one more point where we have to verify the vendor invoices with the online databases, the public record, the KYC repository. Check with if the vendor master's info features on vendor invoices. For example, the KYC documents, the bank details which has been provided by the vendors is different with the bank details which has been updated in the vendor master, and whether the invoices are approved as per the authority matrix. Okay. So the accounts payable reconciliation. Yeah. The next point is the taxes and compliances. Income tax, the requisite TDS has been deducted by payment. I think that yeah, 206 AB compliances. GST correct rates have been charged. We have to check the cases for block credit while since we are purchasing. The GST to be reconciliation. The payment has been done within a period of 45 days. The ROC filing as well as 43BH for MSME. Uh, and most important, whether e-way bills are generated and annexed to vendor invoices. Okay, how the contract should be made. There should be a standardized contract format for all the suppliers. As I mentioned earlier, I had seen a few cases where the contracts have been made in just a full scale paper. There was no approval as well. So this is not a standardized contract. The contract should be approved by the legal team prior to sign off. That there should be a proper DMS system, the document management system for all the active vendors. There should be a tracker. Even the contracts which are expired, that should be kept with us in the DMS system. Yeah. In the contract, there should be specifically the penalty clauses, the arbitration clauses. In clauses should be mentioned in the penalty. As an auditor, we should check and we should recommend them that the penalty clause is not been mentioned or the arbitration clause is not there. So since this is a recourse for the company in case there are any quality issues or there are any rejections. Okay. So also I would like to highlight on mainly on the vendor master and segregation of duties. So the vendor master should contain details of the vendor name, the bank account details, the GST address, address of the vendor, PAN, MSME status of the vendor. In many of the vendor masters which I have seen, there were cases where the MSME number is there, but the status is not available. That whether he is a medium, small, or a micro enterprise, or as well as a trader or a manufacturer. There are specific segregation of duties should be there. The segregation of duties, since it ensures that the different people perform key activities across the procurement to payment stage. Okay, the risk which are involved in the vendor master as well as the segregation of duties is that in the vendor master, the main risk is the duplicate vendors or related vendors are created. The multiple codes are created for same vendors. The same vendors are linked to the employees or the directors or any other related parties. There may be incorrect or unverified bank details. That the payments are there may be cases where the payments have been diverted to unintended accounts. There may be cases where the transactions we are doing are with the inactive or blacklisted vendors. So we have to check the system, or old or banned vendors, and still we are having any transactions with those vendors. We have to highlight those points to the management, and we have to ask for proper reasoning that since even though the vendor has been blacklisted from the system, then how we are having transactions with those vendors. And the main risk for the poor segregation of duty is I have seen in many of the organizations where one person, the reason which they give is we have less people to work with us, or there has been continuous attrition rate in the organization. So all these are excuses. We have to just focus on the process which has been which has to be followed, or even this can be hints of any fraudulent activities within the organization. So yeah, so poor segregation of duties is that the one person is performing the PR creation, the PO approval, GRN, payment processing, etc. Okay. As an auditor, what we have to check is we have to do vendor employee master matching using the PAN number, bank accounts, the review of the vendor master we have to do, and whether if there are any changes in the vendor master and whether how the changes in has been approved. The segregation of duty matrix and the access rights which has been provided in the ERP we have to check. We have to check the user IDs to the active employees. So if there are any cases where the access has been provided to specific employees and he has left the organization, or secondary he is on a notice period, so we have to map those also. So yeah, the observations or the key data points for the P2P process audit is there may be cases where the PRs have been issued. So I already explained it to you. Yeah, but the PR have been issued but no corresponding PO, that is yeah, no PO reference in the PR list. There may be cases where different rates have been we have taken a different rates for the same materials. So yeah, so for one point of data analysis is what we can do is same from the same vendor for the same material, we are charging they are charging us different rates in within the period of around 2 to 3 months. There is one point of data analysis. Second point is the different rates have been charged for the same materials from different vendors. So I will repeat again: same vendors, different rates. Yeah, same vendors, different rates for the same materials. Or and the second thing is same vendor, same material but different rates within the period of 2 to 3 months. So that analysis, if you do, you'll understand the and they will provide a certain reasoning, or there may be cases where there will be no reasons also with them, or they are not, the top management is not aware of such cases. We have to check for the next point is we have to check for open list also. There in the open POs, they're pending deliveries or pending invoicing. We have to highlight those cases. No SAC code assigned for services in the PO register. So I will explain it to you. There will be an register with them where the material register will be there, where the SAC codes have been assigned or the codes have been assigned, and that specific material has not been procured while purchasing, and that is highlighted in the PO register. So you have to compare the material master or the item master versus the PO register. There may be cases of open PRs and POs. Yeah, in the GRN preparation, is not as per as the purchase policy. There may be in the material list, there may be certain items which we have blocked or blocked, but still we are purchasing it. We have to ask for the reasoning. There may be cases where the items have been delivered by them without asking, so we have to ask for the reasons for that. Or there may be items which are delivered but they're not been invoiced by us. So yeah, one more case is MSME data accuracy or payment related issues, and yeah, possible duplicate vendors in the SAP. Okay. Yeah, the purpose of doing it is to the purpose of doing the internal audit of the procurement to payment area is to assess the control gaps, the process inefficiency, and we have to identify the potential fraud patterns. Okay. So these are the case studies. Since it is not a two-way session, I will only answer those points. So you just if you are in a cabin, or so you can try the case study and tell me what are the issues. But yeah, on your behalf, I will only answer those case studies. So the PR date is 30th August. The PO date is 9th June 2023. The GRN is 30th August. So we can directly see this is a case of the purchase order has been created before the purchase request. So the next case is yeah, sorry. In this, the PR date is 10th October 2023, as well as the payment date is 5th October 2023. So this we can identify while doing a 5-way reconciliation from PR, PO, GRN, invoice, and payment, which is very important for the procurement to payment audit. You can use data analytics tools for doing the 5-way reconciliation. In our organization, we are having tools for this. We have to just input the data and it will provide us with the output, as well as maximum observations which I discussed with you today. Those observations which will directly be highlighted by the software to us. So in the next point, yeah, the next point which we can see is the PR PO is 14th. Yeah, the 14th April, the 22nd April, and the third is the GRN is 18th April. So this is a classic case of the GRN before the PO has been raised, and the next is the invoices have been done. For example, the GRN is the 2nd June, and the invoice has been done in the 30th April 2023. This is a classic case of invoicing before generation of PO. Okay, the case study 2, the vendor which may or may not be related to an employee. Our duty is just to highlight as a doubt. I'm not telling that that will be cases, or if there are cases that there may be possibility that the same employee is, there may be possibility that the same employee name, for example, Vijay Kulkarni would be vendor as well as a employee also, but they both will be different person. But yeah, our responsibility is just to highlight it as a query to the management and let them provide us with the documentation. Then no, these two are different person, and they both are not related to each other. For example, if you check here, the vendor name is Viral Investments and Company, and an employee name is Viral Jain. Okay, Jagatpal. We have in Vilas Jagatpal. The Maharana manufacturers, we have Dilip Maharana. Yeah. So yes, these things should be highlighted during your data analysis. The Jagatpal, Vilas Jagatpal. KM Engineering Limited is a vendor, and the employee name is Kush Mishra. Amazon Power Private Limited, Akansh Tiwari, those are not related to each other. Okay. So yeah, in these also, if you check, what we can do is Amazon Power Private Limited and Amazon Power Company. You have to check whether whether these two are two different companies or a single company. If they are two different companies, then the vendor code created separately is okay for us. But yeah, if they're same company, but just because two different persons created the vendor name in the vendor master, uh, it is not right. So there should be a single vendor only, and there should be a single vendor code. Yeah. The third case study is regarding the sequencing issues. So if you'll check here, this is one more point where the PR number is, if you'll check the 51, 52, 53, 55. So PR 54 is missing in the sequence. In the PO, if you will check the yeah, in the PO number, if you will check, the PR is included. So even again, this is not right. And if you will check without this, if you will see that 25, 26, 27, 28, 29. So here there are two issues. One, in the PO list you can check, see the for the PR also, and second, there is a sequencing issue also. In the GRN also, if you will check, 45, 46, 47 is missing. 48, 49, 50, 51, 52, 53 is missing, 55, 56. So even though the observation or the point is very minimal, but the risk which has been which is there in by identifying this is very high or maybe very high. There may be clerical issues also, but you have to keep proper documentation and you have to take proper reasoning from the management or the process owner that why the system skipped the specific PR, PO or GRN, or why the PO list has a PRs in the sequence. So the test your knowledge questions, which is not the pillar of internal audit process, as we discussed the pillars earlier. The planning, field work, inquiry. So first we plan the audit, we do field work. The inquiry is the correct answer, and then we do follow up. The inquiry is not included. Which document outlines the details of a transactions, including items or services ordered, quantities, prices, and delivery dates. So invoice, goods receipt, purchase order, and requisition. So ideally requisition does not have any details of quantity, prices, and delivery dates. Yeah, it has details of the including order, so the things to be ordered, the quantities, prices, and delivery dates. So the next step is what is the first process step in the procurement to payment process. The payment processing, no. Vendor management, no. Identify need or requisition, yes. We have to first identify the need. We have to plan the our requirement, and then invoice processing is definitely no. Which of the following is a potential risk in the P2P process relating to invoice processing? So overestimating the budgeted expenses. Since the invoice processing, it is no. Or delayed delivery of goods to the vendor. It is not relating to the invoice processing. Overlooking vendor performance metrics, it is no. And the duplicate payments to the same vendor, it is a high risk, which we discussed during our presentation also. Why is goods or service receipt important step in the P2P process? To approve the invoices, no. To verify, yeah, to verify the receipt of goods or services. To select the suppliers, to issue purchase orders, no. What does procurement to payment process encompass? So product development and marketing, Vendor selection and onboarding, yes. Employee hiring, no, it is an higher HR process. Order fulfillment and customer service, no, it is a sales part. Product development and marketing, it is a part of marketing. Vendor selection and onboarding, yes, it is a part of P2P process. Employee hiring and training is part of HR audit, HR process. Which control measure is implemented to ensure that the goods or services received are accurately reflected in the purchase records? The three-way match, the vendor performance evaluation, yeah, the three-way match is the correct answer. The vendor performance evaluation, no. Vendor master data review, budgetary control, all the three, all the next B, C, and D are irrelevant to the question which has been asked. The correct answer is the three-way match. Which of the following control object is essential in the P2P process to prevent unauthorized purchases? So this is a very important point. So vendor master data accuracy, efficient invoice processing, timely payments to the vendors, no. Strong supplier relationships, absolutely no. So efficient vendor processing is very important. Why is continuous improvement? So the point of continuous improvement, I would like to show you one video. Why is continuous improvement important in the P2P process? To identify suppliers, to maintain accurate records, to enhance the effectiveness and efficiency, to verify goods receipt. Yeah, so continuous improvement is very important, even not only for the not only for the P2P process, but for all the processes within the organization. Even for us as an auditors, it is very important. Ideally, till last 4 to 5 years, the audit process is more of the auditors used to follow traditional method of auditing. For example, we used to have an Excel sheet. We used to put formulas on in the Excel sheet. So today, most of the but today there are various tools which are available in the market for automating the audit. You have to just identify those tools, pay the money, and your output will be ready with you. For example, for checking the MSME status, the basic example for checking the MSME status, whether the GSTN is active, whether the vehicle which has been registered for through which they are doing logistics, it is not part of P2P, but yeah, the logistics, the vehicle which has been registered, whether there are any challans against those whether against the vehicle. If you are saying that in the books that or in our fixed assets, the register the asset which is a truck, but actually if you check that asset is just an auto or a small jeep. So these things we have to verify. For that, the automation is very important. We have to move from traditional method to data analytics, even in the internal audit. So your system should do your 70 to 80% of your audit directly. The rest 20%, you have to just analyze the data. You have to give inputs to your software that how you have to do the audit. Why segregation of duties important in the P2P process? To ensure vendors are treated fairly? No. To prevent conflict of interest within the organization? Yeah, this is the correct answer. To streamline the purchasing process. Yeah. What does first we'll check the yeah. What does the payment processing step involve in the P2P process? The processing payments to supplier. What does the term three-way match refer to in the context of P2P process? Invoice, PO, supplier contracts? No. Invoice, PO, GRN? No. Supplier goods? Yeah. Invoice, POs, and goods receipt. This is the correct answer. Goods receipt, invoices, and payments? No. Supplier codes, invoice, and payment. So it is three-way match is starting from the ideally it is a 5-way match. So PR, PO, GRN, invoice, and payments. This is a 5-way match. So I will show you one video on I will show you a video on continuous improvement.
Stunning first part of the race for Michael Schumacher.
But possibly explained by how early he's coming in. You can see we've still got 48 of the 57 to go. So he's not even done 10 laps yet before making his first stop. So
seconds. Blink, and yes, you have missed.
Yeah, the thing which we can see in this video is that the importance of continuous learning. In 1990, they used to take around 8 to 9 seconds for the same activity. But yeah, through continuous learning and through improvements, through modernization, they came down to around less than 1 to 2 seconds. Yeah, one more video is, yeah, so post this video you must be thinking that if we do all these activities there will be no risk within the organization, so all the risk will be easily eliminated, and there will be no risk in the future also. So I will show you on video regarding that whether the risk is eliminated if we follow the process which has been mentioned by me. So this is a live example.
Sir, we found a way to eliminate risk entirely from our projects. Lead crystal, custom engineered. Name a project we're bidding.
McChesney Office Complex.
In February, we'll have a crane accident that shuts us down for 8 days.
Coopersmith.
We've got cost overruns in March from a global spike in steel prices. In April, credit markets freeze up. And we'll have 2 subcontractors going under.
Was this expensive?
A little.
We're gonna be rich. Did we have insurance on that?
Oh, look. It came with a stand. Oh, look. It came with a stand.
So yeah, the conclusion is the risk can't be eliminated, but yeah, we can identify the risk as well as we can manage it effectively if we plan our risk properly. So yes, thank you. And if you have any doubts, Prerna ji, whether there are any questions for me, you can just
Yes.
or
There are a few questions, and
I will-
let me just take them up for you.
yes, I will just read it.
We have Nisha from Abu Dhabi. She has a question. In large retail organizations managing over 2 lakh SKUs, is it practical to implement a formal purchase requisition process and purchase order approval workflow? How can these processes be effectively managed in the context of retail operations? Yes, that's the question, and she would like to have your answer on that.
Yeah, give me 2 minutes. Yeah, ideally, what I feel is since they are already having 2 lakh SKUs, they must be already having an formal PR process and a purchase order approval workflow. But yeah, if they are not having, they're at a but yeah, if they are not having it, there may be huge risk within the organization. But because today they are having 2 lakh SKUs, but tomorrow they may be having around 20,000 more SKUs. So it is better that today they have an formal purchase request. It's not only that there should be documented PR process or there should be documented PO process. It can be through it can be through a system also which can be implemented at a vendor place where directly the PRs will be raised or directly the POs will be raised to the vendors. And yeah, but yeah, I feel it is very important there should be a formal PR as well as PO process for a proper workflow. Uh, yeah.
Nisha, I hope that answers your question. In case you require more clarity, maybe you can get in touch with
Yes.
Vijay sir one-on-one. The next question we have from Sony Jain. Could you please share the audit points for bid comparison in procurement, including the methodology for rate comparison and the process for validating prices against market rates using reliable resources?
Yes, I can share it. Please tell her to just email me. So I will share my email ID also in the chat.
Yes, if you can just share your email ID, maybe we can have the someone from the board share the email ID.
Yeah.
Yes, let me then take on the next question. That's from Mr. Suresh Kumar Gujar. How to identify risk?
Can you please post it on chat only? Sorry, ma'am.
Okay. I have put it on the chat. Let me just read it out for the benefit of the audience. How to identify risk fraud in case of paperwork looks perfect. The substance is wrong, say inflating PR and all PO and approval in place, but still fraud is happening directly at PR inflating stage. I'm not sure if the question is
Yeah.
conveyed to you in the way it is understood by the audience, but you can just attempt maybe.
No, ma'am, I'm unable to understand his question only. That means I think he wants to say that even though all the processes are in place, but still fraud is happening.
Correct. There is some fraud happening, maybe like in an inflated PR or the POs are in place, but
So
at
one,
the PR inflation stage, there is some fraud happening. So how do you deal with something of that
yeah,
kind?
but for that we have to consider the plan. We have to check for the planning. So whether the items are actually required to raise a PR and also the end usage of that items. So and also we can do trend analysis. If last year for the same or the for the last year or the last month for the same manufacturing of the same product, that item was not required, and today we are buying it. So what is the need of buying that item? So we can ask such things to the management.
Okay.
Yeah.
One more question we have for Mr. Vijay Ganesh. What is the impact of non-closure of long pending PR or PO? That is the open POs. And also a second question he has is, in many cases, quotes are received on WhatsApp. And in such case, how do we check the validity of the same? So two questions for you. The impact of non-closure of long pending PRs or POs and quotes received on WhatsApp. How is the validity for that checked?
Yeah. So the first question is regarding the open PRs and POs for a longer period of time. Okay. So first we have to check whether there is specific policy within the organization to close the PRs within a specific time. Okay, if there is if there is no policy regarding that, the second thing which is the risk is there may be purchases which has been done. For example, there are two PRs. The second PR which we have raised currently. Uh, the requisition earner knows that the previous PR is still open, so he may purchase the items taking into base the earlier PRs, or he may raise the PO taking the base of the earlier PO. So the 10 items are purchased from the second PO or the second PR, and few out of the items which are not approved in this PO, he may purchase it from the open PR or PO. So out of the 15 items, for example, if he require 15 items and the approval is only for the only for 10 items, and he knows that 5 to 6 the PR for the 5 to 6 items, other items are still open. So what he will do for the 10 PO items, he will purchase from the existing PR or the PO, and the other 5 to 6 items he will purchase from the open PR or PO, which is not right. So, and the second question is, many of the codes are issued in WhatsApp. In such case, do we check the validity of the same? First of all, if the codes are received on WhatsApp, we have to sit with the management and tell them that at least to document those WhatsApp chats through a mail, and tell the vendors to not to send the codes on WhatsApp. These cases we find generally in the construction type of business where these codes are sent on WhatsApp. But for as an internal auditor, we have to check the validity also, because it will save our we have to tell our management the risk which are there. Example, there may be legal cases which, so WhatsApp chat won't be legally enforceable. So yeah, so we have to check the validity of the codes which are received on the WhatsApp. What data analytics techniques can be used to check?
Yeah, so the next question is that what data analytic techniques can we use to check fake purchases or raw material requisitions which are fake?
Yeah. So instead of data analytic so one thing is trend analysis we have to do. Second thing is whether the purchases have already been planned. Third thing is if the purchases have been done, so whether the goods have actually been received, or the purchases have already been cancelled. So we are raising a PO and we are cancelling it the next day. So just to increase the the basic thing is, instead of data analytics, the more we have to concentrate on goods which have been actually been received. So whether the PRs or POs have been generated for those items. If they are not generated, or if the PRs or POs have been generated and the goods have not been received, then it is a point for us. Or secondary, if the purchases have been done without a PO or a PR, then it also it will consider as fake purchases. So yeah, this was my answer to this.
Okay, so I think we'll take a last question now.
Yeah.
Someone has asked in what are the available tools for internal audit, as you have spoken of automation of audit.
Correct. So it is a third party tool which is available. So if they can mail me, I can't speak about it in open forum.
Okay.
But yeah, if he will mail me, I will definitely answer this question to him.
Okay. Also, one last question on that, on the same lines, is when we use these kind of AI tools,
yeah,
what happens to the privacy of the data of the clients?
Correct. So one thing is we have to take the tools. First thing is we have to sign an NDA with the third party. We have to also confirm with the clients that such data would be shared. If they are okay with it, we have to do data analysis on that tool. So example, if there be one tool which we are using is Idea Software. It is well known to everyone, and they have a good reputation in the market as well. Even the clients are happy that we are using data analysis. We are using Idea Software for data analysis. So yeah, but one thing which we have to do from our end is we have to you do data analysis through those data. We have to sign an NDAs with those parties, because even we are aware that the article stuff which is there or employee stuff, they're directly putting the data for data analysis. I've seen many cases where the articles are putting the data into ChatGPT directly. So even that is a risk. But instead, if you go a formal process, it will be beneficial for the client as well as for us as an internal auditors.
But these cloud-based AI
Yeah.
models, do they have this kind of access for an NDA?
Yes. Because they are set up in they have a specific organization. They are set up in. I have known few companies where they are set up in Mumbai only, and they do sign those NDAs.
So, for the benefit of audience, let me just confirm that when we are getting into these kind of data analytics, we are nowhere covered under any kind of offenses under the DPTP Act.
Correct.
Right. I hope most of the questions are answered, and I'm sure Vijay sir has done a wonderful job in conveying all that he wanted to, and we have a lot to benefit out of what he has said. Thank you so much, sir. It has been a pleasure to have you speak here. And abundant thanks to the Internal Audit Standards Board for having this session, highlighting a lot of the important aspects of internal audit. The other questions which are still to be confirmed and conveyed or answered, maybe please mail to Vijay sir. The email ID has been provided by the board. Thank you so much. Thank you for joining us.
Thank you.